Okay, Doug, I don't know if you can hear me or not. Hello, can you hear me? Alright, so I'm assuming you can. What you should do is you do this 22 times, not that big deal, it might take you a little bit. Pick one of these funds, which they give you this whole Greek alphabet, so that way you really can't tell what it is, and you got to drill down on it, and you highlight, and you know how to highlight, and you right click and you search Google, and then you look through here and you're going to find that JP Morgan Smart Retirement 2035, that doesn't match it. You got to go back. It's Smart Retirement number 2015 C10. So here it is. I already found it once for you. So you go here to JP Morgan Smart Retirement 2015 and you see the Morning Star. Well, what this is it's a fund number JSFCX. That's the ticker that they purchase. They just give it this big long number. So JSFCX. Now if you open that and you go into Morning Star, then you can sort of read a little bit about it. I'm going to copy the ticker symbol instead of their long Greek bullshit that they give sheeple. It's just a 2-star fund. It's got, you can see your front loading. Your expenses are 1.25%. None of this stuff, it should be just Greek to you. It's Greek to most people. So this is the Morningstar rating. But notice that it will tell you that it's what it does. It's, oh shit, this thing is a fund full of funds. Okay, so I'm not going to talk about any of this anymore. So you're going to take that ticker symbol and you're going to go to a site called bar chart. So up here, it's barchart.com, and Doug, go in and create an account. It's free. So create an account, and so from here, hang on, I'm gonna go to a different page. I'm gonna go back to the same thing. It's still barchart.com, and I'm in an account, and I have some different portfolios that I created out of the whole bunch of ones in my fund. So I've got Jackson National and is my IRA, and so here's the matching tickers that match their particular fund. All right, so I went ahead and created a fund. Created a list so I could put each of these at the same time. It's Greek. The fund gives me this long, drawn out name, and I drilled it down to find out what it really was. I found out that one of these long names was and matches IWO ticker symbol, which is a Russell 2000. So you need to go in, create an account. It's free. Save your login and your password. Create a watch list. Put your 22 items in it. Find the, like I showed you before, take that long Greek, drill it down to a ticker, take the ticker, put it in your watch list. Now I already did one, and I already did one for you. So here's a new watch list. And that one I did from here, drilled down to this ticker, I drop it into a new watch list, JSFCX, which happens to be this 215 Smart Class. And then from here, you can look at the main view. You're not going to really track your portfolio here, but you're able to see what it's high and it's low and that business. So you're not going to worry about it. What's important is you go to the opinion. So bar chart takes all those indicators I was explaining to you, And one of the indicators called trend. One is a moving average, the opinion, the previous opinion, last week's opinion, last month's opinion. Then it tells you that it's 80% buy in the short term, 100% in the medium term, 33% in the long term. So this is barchart.com, and at this point, to be in this particular one, according to the indicators, okay, in it, short term is considered anywhere from a couple of days to a month. Medium term is 2 weeks to 3 months. Long term is until the day you die or whatever, which is bullshit. You would always want to review your stuff. If all of a sudden you're in this thing and once a week you go in and you just look at what are the indicators telling me to do, if they're starting to get smaller, you get out. So like on mine, my equities, wait for it. So from here, I went to the opinion. Now I can look at all of them at the same time. So it's telling me short term, Russell is a sell. A little stronger on the short term on this one. And they're both the same on the long term. Right? So everything's sort of green light. You can watch it turn. You can watch the short term, medium term, and long term on each of these equities slowly start changing. I take screenshots on occasion to remind me what it was before. Even though this tells me that last month the average was 80% buy. Last week, 40% buy. Takes a little bit to figure out how it works, but it's in a nutshell. If you lay all 22 of them out here, then you'll be able to look at it and say, all the indicators are saying own this one, don't own this one. It takes a little bit of work up front, Douglas. It's worth it. Now I can show you some of these indicators if you're interested in it. That'll be another time. There's quick ways to get to your charts. If you wanted to look up a particular symbol, it's real easy. Let's look up the Apple. Apple's probably going to be a buy. Everyone's got to buy Apple. Shit out of Apple. Ding, 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 ding. Pulls it up. And I come over to this side where I'm asking for, I want to see what bar chart's opinion is on Apple. Buy. All these are the indicators that this bar chart is looking at to come up with those numbers that I was showing you on these other ones. Trend spotter, short term, medium term, and long term indicators. Let's do one that's not all buy. Let's do forward. Surely that's not all a buy. So now we got some buys and some holds based on indicators. These aren't analysts. These aren't people's opinions. These are mathematical opinions. Let's look at that. Let's look at the what's a commodity. Let's go to. Well, here's soybeans. 100% buy. Remember me telling you that the grains, if I was to show you a picture of where the grains are currently, it would be crazy not to buy. Invis. Futures. Sometimes I lose myself. Okay. Soybeans, long term. It's on a trend where it's up. Let's go to corn. Corn's way down. It can't stay far that down. It's been beaten up since 2008. It crashed and then roared up. And in 2013, it's been crashing. It's down here in this area where it will roar up. And we're talking about a triple your money type of play. If you can get into an ETF or So until you go through those 22 and you itemize them, and then we figure out what's actually in them, we don't know if we can get you into these type of place. Otherwise, you would have to request being self-directed so you can speculate on some better stuff. Most of the time, these fund managers that give you a 22 item menu, they lock you into dogs because they make money at it. You don't. Anyway, let me go back to that one. I think it's JJG or JGG. This is the grains that I'm in. And it's giving me 100% buy except for one of the indicators. So back to the same thing. Understand bar chart. Go to my bar chart. Make an account. Try to figure out how to get a ticker symbol in all 22 of your deals. And now you're going to have some math behind why anyone's choosing something. And when your Fidelity guy or whoever it is you're talking to says, oh, hey, get into this or get into this, and oh, don't get out, because how long you're retiring 20 years from now? Okay, fine, it's just a target it's going to make money until 2025. Bullshit, don't believe that crap. I can show you a chart that is hang on a second. I will show you the Dow. Yeah. I will show you the S&P 500, and I will show it to you way back. Let's go way back. And hang on a second. I go back 20 years. I don't know if I can or not. 1 second. Give me a second. Bear with me, dude. Cheap. Maybe it's this one here. Yeah. All right, we'll look at the Dow. Everyone loves, because they remember the Dow. It's easy for me. The Dow, it's like if it goes up 100 points, it went up 100 points. Everyone gets used to that particular number. Let's go back here. A long ways back. We'll go back before the internet was invented. Okay. So this is 1991 right here. This is the crash in 1987 right here. So the amount of volume of trades that was happening, they always would tell you, well, you just put your money in the Dow and you'll make money. And they've been doing, this is back in the 70s. And yeah, it's not necessarily true. But then it started trending upwards. Look at the volume. The volume kept getting higher. Started trending upwards, and then it'd crash. But then it would took, for you to get your money all the way back, you had to wait till here. So that was 6 years. You get your money back in 6 years, right? But if you would have sold somewhere in this area, you would have got your money back in a couple of years, right? If you sold at the top and then bought somewhere down here, dude, you'd be, well, so now the internet comes around, all right? So now the internet comes and people are able to start trading online. It's electronic. It's not, you don't have to call the pit. You don't have to call the broker. And look at the volatility. Remember, this is 1987. Now, the moves are so much bigger that there's still all Fidelity and the brokers and the fund managers and the financial advisors. They're still going off of that old myth or theory that if you just put your money in it, you're pretty safe. Oh, it isn't. It's not scary at all. They're not going to change their methodology in the way they sell to you based upon this information, because if they change their methodology, they would have to tell you, oh my gosh, it's crazy out there. I hope you got money to lose, or I hope you learn how to sell fast. They're not going to say that. They never have. So now, the internet started getting involved. And now our volumes and our volatility has gotten crazy. So, in 1998, if you bought some here, and in 2003, you'd be just as poor as you were as 2008. This big change. And then let's just say you still hang on to it. Oh, we're making our money back. You're actually poorer now because of this crash. Then the government started printing money. They print to bail us out of this thing. This happened 2007, 2008 crash. Bail us out, bail us out. Oh, they stopped. They started tapering. Oh, they better do some more quantitative easing. So they printed another 800 billion. And then they stopped again. And then Japan printed a bunch, and Europe printed a bunch. So there's all this cash in the market, and it's all being thrown into the Dow and the S&P and the equities, right? So then over this time, commodities have been being beat down. One of these days, when this thing takes a breather, when people sell, they put their money somewhere else. It goes into cash, it goes into commodities. So look at all 22 of them, Doug. Spend the time, take a week, do a few a day. If you need any help, give me a call. It's got to take a breather. It's got to take a breather. It's been going straight up. Well, it's been on this trend for from 2009, the bottom, 2009 to 2017. So that's 8 years, and the cycles are usually 7 to 9 year cycles. So we're here. Don't get sucked into U.S. equities, which is just stocks, company stocks, unless they have exposure to commodities, steel, lead, the grains. So we'll see. Anyway, I started talking a lot again. I do that. I'm going to post this. It's 17 minutes long. Sorry.